Welcome to the session. Topic of this session is aggregation concept. Different types of projects are implemented. Projects are of different categories, and they have the impact on different entities. Like project entities, in the target groups, the production resources, the environment, and socio-economic environment. So they have the different types of the impact or effect from the project activities, and actually we need to measure all this impact in the national income. So basically the aggregation concept or aggregating the project output or input activities in the national project or national income require clear understanding of the various concept we used in the aggregations. Important concept like in case of the agriculture project is the farm budget, which is the basic unit of the project planning or the project activity. Then measurement of domestic products is also there, and then the different concepts are there. The difficulty in the measuring the domestic products, the usage of the the domestic the aggregate concerns of the domestic measures. So what are the different usage of the national income? So and then there is also the whole aggregation process is also affected by the the price behavior. The change in the value of the commodities or money over the period of time, that is also affect the project output or value of the project output. So all this concept we will be discussing in this class. So we will have the meaning and concept of different concept we use in aggregation of the project output into a national income. So to start with, basically for aggregation exercise, the typical farm plan is basically is the first point or proper point to begin the aggregation exercise. So typical the farm plan basically include the different activities. In case of agriculture project, it basically represent a careful judgment of the agriculturist, or we can say the farmers, about the most profitable farming activities and the cropping pattern for the farmer. So the farm plan basically it is basically a judgment of the farmers. So which activity he should undertake, which type of the crop he should undertake. So it is basically careful judgment of the agriculturist. And basically we also give some certain assumption about the risk which are involved in agriculture activity, which are involved in the farming activity, and also we give some assumption about the risks a farmers or the farmer they are willing to accept in the production activity, and they assume that this kind of the risk will be there in this particular type of farm activity. And also the farm plans represent the preferences for subsistence food crop production, the cropping pattern which is required for maintaining the farm activities or maintaining the farm community or maintaining the farm family. So that is also represented in the farm plan. So when we discuss the farm plan, basically it includes various things, and we consider so many things. Basically in the farm plan we talk about the adoption of the new practices. So what are the new things we are going to introduce in the farm, and the cropping patterns we will be we are willing to follow the cropping pattern, that is also there. And there is also consideration about the yield that we can obtain from the farming activities, and also the expected value of the output from the farm activities. So all this the enterprises selection, the production aspect, or the value of the output, all these are included in the farm plan. So here intuitive judgment of the farmers based on his or her experience can be supplemented when we prepare the farm plan. So we can use the the partial budgeting techniques, and basically here through this partial budgeting techniques or partial budgeting analysis we can test the alternatives which are available to the farmers, and then the farmers can adopt for his better or her better income from the farming activity. So here his intuitive or his experience can be supplemented with a simple partial budgeting analysis, and also if possible or if the available, we can use the formal programming analysis like linear analysis or other mathematical analysis to develop the farm plan or to develop the farm budget. So now we will understand the farm budget basically, and the farm budget is basically it is the economic information that gives a picture of individual farm in financial terms. So farm budget provides the complete picture of the farm activity in terms of money values, and sometimes we call it as a farm management information. And basically this farm budget or farm management information is developed to help the farmers to improve their managerial skills. So the purpose was to develop the managerial concept in the to bring the managerial concept in the farm activity. So basically it is to provide the managerial skills to the farmers. And here we conduct the survey of the individual farmers and to gather the farm management information, and that can be supplemented by the careful judgment also, and this require a combination. In the project area there are different types of the different categories of the farms are there, small size, medium size or large size, and we conduct the survey of these individual farmers to get the information about the the farm activities. And when we collect the activities about the farm or farm plan, we collect the information about the technical information from the agronomist or civil engineers or soil scientists, and also we have a judgment about the how efficiently the farmers are doing the cultivation practices. That also we collect the information during the survey. So basically we collect the data on different aspects when we conduct the farm survey for aggregating the project outputs. So we collect the data on the value of the farm output, the cost of the production, the loan receipt and the repayments, and the cash surplus or deficit with the farmers. So we collect information on these aspects, and the information is useful to collect the value added from the farming activity. So all this information we use is to basically find out the value added from the farming activity. So cost of production here include the material inputs, basically the seed, fertilizer, insecticides. Then the value added, which basically the value of the farm output minus cost of the production. So individual information is basically aggregated to have the project level the output and project level value added, and the value added for individual farm is basically a sum of the wages and rent for land and the interest on loan, depreciation on farming equipments, and profit for the farmers and taxes. So now after having information about the farms, then we move to the aggregating of these farm budgets. So aggregating the results of farm management information become a complex process because we have different category of the farms, different, sometimes we have irrigated farm, unintegrated farm, small size farm, or the medium size farm, large size farm. So this complexity increase at the level of the aggregation increases, and basically this is due to we have the heterogeneity in the individual farms, and there is a difference in the size between the individual unit and then the aggregates also we have different category of the farm. So impact of this variation can be minimized, so there are a lot of variation in the farm category or farm size. So we can minimize these variations by choosing a suitable sampling process. So when we conduct the survey of the different size of the farms, and to have aggregate measure of the project output. So if we are following a proper sampling procedure, we can minimize this variation. And the best way is to basically when we collect we collect the information from different category of the farmers, best way is to classify the individual farms by size of the farm and also availability of the irrigation facilities. Like basically the productivity in a project area is depend on this endowment factors like the size of the farm or the irrigation facilities. And basically this classification is suitable for estimating the farm income for aggregating them in a project at the project level, at the regional level, at the national level. So like we have the common classification of the land holding size, like the marginal farmers which are up to 1 hectare, then small farmers 1 to 2 hectares, then semi-medium farm which is 2 to 4 hectares, or medium farm 4 to 10 hectares, and large farm basically about 10 hectares. So this is the procedure to classify the different category of the farmers into these 5 groups. And basically the farms either will have the irrigation facility or will not have the irrigation facility. So total farms we can classify into 10 categories of the farm, like the marginal farm with irrigation facility, marginal farm without irrigation facility. So like total category of the farm may be there, and basically these are the sufficiently homogeneous groups to estimate their income level. So actually the income level we can when we do survey of this different category of the farm, and we get the output data from this farm, and when we have the number of different farms, so when we multiply this the average output of a particular category of farm with the number of the particular category of the farm, and then we can get the total output of the project of when we are doing at the project area, or we can get the project total output of the nation when we are multiplying at the national level. So if large sample size is there, there are large number of the sample size, if numbers are in the lakhs, we can use the standard statistical techniques for aggregating the data at the project level or at the regional level or at the national level. So here we use the weightage weight basically. So we have to calculate the weight for each group of farm based on their distribution in the population, and weight basically is used to estimate the weighted average of the various parameters. And this procedure is also useful for aggregating watershed area. So we can use when we want to have the cost benefit analysis of a particular project or contribution of a particular project in the watershed area. Basically watershed area is beyond one district or 2 districts, so here also we can apply this aggregation concept. Now we will move to the domestic product measurement, and it is very important, and basically the aggregates of farm budget is useful to study the impact of the project only. When we do the aggregation of the farm budget, so we can find out the impact of the project in the project area only. And then farm produce basically is the raw material for the productive process. The farm produce is also the raw material for the many manufacturing or in the industrial process, and the productive process basically transform this farm produce, which as a raw material they are using, into finished products. So with the help of the service of the labor and manager and the services of capital like machinery, equipment, structure and working capital, they transfer the basically industry production process transfer this raw material or farm produce into a finished product. So value of the finished product is also very important, and basically it consists of value of the raw material and intermediaries, and also the value added by the labor and capital. So raw material and intermediaries basically they purchase from the market as an input cost, we can say, in the external resources they are purchasing, and the value of added by labor and capital basically the contribution from the own labor or capital contributed by the production or project. And basically there are different agents who contribute in the value addition, like the worker and manager, shareholders and creditors, which supply basically the capital, owners of the building and basically structures or the farm structure, and basically they are compensated in the form of the wages, salaries, profit, interest and rent. So value added in a productive process basically is equal to the income paid out to the supply of the primary factor of production. And to get a measure of aggregate factor income generated in the production, that is GTB, we add the value added in all the production activities or productive activities which are carried out in an economy during a certain period of the time, usually financial year. And the productive process produce at the national level thousands of such goods and services for the final consumption. So actually the production of thousand types of goods and services are there, and we need to aggregate all these thousands types of goods and services to get the national figures or national level, or we can say the national gross product or gross domestic product, and they need to be converted basically into the monetary units. So we have the physical production, and now we need to convert them into the monetary units for aggregation purpose. And basically this is done by the multiplying the quantities of their market quantities by their market prices, and when added together to get a single measure, that is a gross domestic product. So we have the thousands of goods and services, and to find out their figure, their contribution, their share in the national GDP, what we do, we multiply that quantity with their market prices, and then we add all these values to get the single measure of the gross domestic product. And there are certain difficulties while we measure the gross domestic product, like there are some conceptual issues or some statistical problems in calculating the domestic products or measuring the domestic products. And the non-market production is one of the major problems in the country like India. And there are various production, particularly at the household level, which are not accounted in the production process, because they do not involve a market transactions. The work done by a household lady, which do not involve any marketing practice, the marketing practices or market intervention is not there. So the output from that household lady is not included in the gross domestic product. So inclusion of services of millions of people from national income account, like it is there, like a housework done by the housewife is not included, but same work done by the paid servant is there in the gross domestic products. So that is there are many non-market production is there in the country which are not included in the measuring of gross domestic products. This leads to the basically underestimating domestic products. So we are less estimating the gross domestic product. Actually the gross domestic product is much more, but we are not able to count some of the production activity which are done in the country. Then another aspect is the imputed value. Some of the self-supplied goods and services are given as imputed value for their inclusion in the national income accounts. For example, the owner of a production a production unit, they occupied a house, and the value added of food consumed by the farmers themselves. So whatever the the resources they have, they are using. For that purpose, we are using some imputed value, because market price is not available for that purpose, and it may result in basically sometimes overestimation or sometimes underestimation, depending on the judgment of the persons concerned. So if a farmer is having the building and which he is using in the production activities, so how much the cost of that building he is using, it is basically based on the judgment. So there may be the problem, sometimes he may have more value or more cost of that building, or sometimes he may not give any value to that in the production accounting. And underground economy is also a major problem. There are many transactions that go unreported, because they involve either illegal activities or sometimes they involve the tax evasion activities, and this activity produce goods and services that are valued by the purchaser. The market is available for that production activities, but because of the non-accounting or non-reporting of that activities, and our gross domestic product is basically underestimated. So all these activities are unaccounted, hence do not figure out in our domestic product estimates. Then side effect or economic bad effect is another important aspect, and basically there is no provision to make adjustment in the current procedure for national account for such effect. So similarly, no adjustment is there in the GDP for the national disasters sometime, and if no market transaction, economic bid are not deducted from the domestic products, or like air and water pollutions are side effect of the economic activity, and basically they reduce our future production possibilities, but they are not accounted in the national GDP. And since national accounts ignores this negative aspect of growth and development, GDP estimates tend to be an optimistic figure. Then another aspect which are giving a difficulty in measuring the domestic product is the labor and human cost. Actually, we does not account for labor and human cost properly while estimating the national product. And the labor, a commodity that is valuable to all, but that is excluded in the GDP estimates. Similarly, we fail to make into account human cost of the employment. We have a lot of physical and mental strain during the job, or during the production activity, or during managing a production unit. For that, there is no cost or there is no value accounted in the national GDP. And sometimes we found another problem is the double accounting of some items, like the distinction between the intermediate products and final products is vital in connection with the welfare significance of the GDP. So in that process, sometimes it is very difficult to make the clear cut distinction between the intermediate product or in the final product, and sometimes they are counted double times in a national project accounting. So another important aspect of the measuring of the aggregate measures is the behavior of the prices. It is very important actually, and the common man as well as the highest policy maker, for them it is very always very close to their heart. They have a lot of discussion on this aspect, the price behavior aspect, and basically the prices determine the purchasing power of our money income. So basically they have the serious implication for living standards as well as they are reflected in the per capita income level. And there are too many prices to monitor individually. Thousands of goods and services are there which are produced by the country, and the monitoring of the prices of all these goods and services is very difficult. And for that purpose, what we do, we group the goods and services into different broad groups. Like in case of the agriculture, we can say the food grain crops or the horticultural groups, and like that we can group the different commodities into a broad groups or broad category, and then we construct index number for each groups and each and all commodity groups. Then we can monitor the major groups or the price index of these commodity groups. So we monitor the behavior of such price index basically, then we calculate the price index of these groups, and the price indices, like we can calculate the price indices for food grains, the price indices for other food items, the textile, the industrial raw materials, machinery and textile. So we calculate different types of price index. And the index for major individual commodities also calculated sometimes, like rice or wheat, sugar and groundnut oil. So these are the major commodities we consume. So for that purpose also we calculate separate the price index for these commodities. And basically there are two types of index which are commonly available or which are used extensively in the analysis of the price behavior, that is the wholesale price index and the consumer price index. And there are several problems in construction of this price index and use of this price index. Like the determination of the weight of this commodity is the most important aspect while calculating the price index, and the weight changes over the period of time due to the change in the quality of the goods or the appearance or the new items added in that particular commodity groups. So price trend has a direct bearing on the various aggregates as they are at certain prices. Then another aspect in the measuring the aggregate output is the real or nominal aggregates. So the monetary value of the goods and services is obtained by the multiplying the physical quantity by respective market prices. So then we get the monetary value of this goods and service, or we can say the national income. And the real refer to the fact that the data have been adjusted for the changes in the price level or the purchasing power of the rupee. So when we use this real terms, so it means if we talk about the real aggregates, this means we have taken care of the change in the price level, the change in the inflation level. So so that reflects the real picture of that growth in the national GDP or national output. So real GDP is the value in current rupees deflated for change in the prices. So when we remove the impact of the change in the prices, then we get the real GDP. That is very important. That give a correct picture of the the national GDP. So nominal GDP, basically they are expressed in the current prices. It measures the value of the output in a given period in the prices of that period. So if you are calculating the GDP of the current year, so whatever the prices are there in the market, we use that prices to calculate the GDP, that is we call as a nominal GDP. So in order to get the real aggregates or real GDP, first we calculate the nominal estimates of the aggregates. We measure first the nominal aggregates, and then they are adjusted with the GDP deflators. So basically the central statistical organization who estimates the quantity produced for each item in the bundle of goods and services that are included in their GDP measurement. And then CSO, the central statistical organization, they calculate the ratio of the for measuring the basically the ultimate purpose is to measure the real GDP, and for that purpose we need to calculate the GDP deflator. And for calculating the GDP deflator, basically we calculate a ratio of cost of purchasing the bundle of goods and services and the current prices, and then we divide this in the cost of purchasing the bundle of goods and services prices with the cost of purchasing the same bundle of goods and services during a designated base year. So basically, if you are calculating the the value of the current GDP on certain base year, so what we do, we calculate the value of that bundle of goods and services in the current year, and we divide the the cost of purchasing of same goods and services in the base year. Then we get some ratio, and when we multiply this ratio with the hundreds, we get the GDP deflators actually. So if the current base year is 2010-11, and we can see the deflator will be the 100 for the base year. So, and the change in the nominal value reflects change in the basically the physical output of goods and services produced and the level of the prices. So there are two components in the when we talk about the nominal value of the aggregates. So there are two things: one the physical output, another the effect of the change in the price level. So hence the increase in the real GDP over time, so the actual growth of the economy. So that's why we calculate the real aggregates. And there are different usage of the aggregate measures. It basically we use as an instrument of economic planning and review. They give the clear picture about the economic situations and the production resources. And the aggregate measures are also used as an indicator of the living standards, and they are also an indicator of the economic growth of the country, and basically they are the mean for comparing the economic performance of the different countries. So now we can sum up the session that the farm budget is the basic starting point for aggregating the project output, and then we can have the aggregate measures at the national level. So, and we have understand about the domestic product measurements, how to have the domestic product measurement, and there are different difficulties are there, like overestimation or underestimation due to different types, like the non-market transaction or double counting. There are many problems are there, so we have understood about that. And then we have also understood about the price behavior, and why there is a need to consider the price behavior of the different commodities, because there are thousands of commodities, and in that condition we cannot monitor the prices of all the commodities. So that's why we group them and we include the group prices. And then we have also understood about the real and nominal aggregates. Actually, to find the real change in the national income, we need to calculate the real aggregate measures of the national economy. And then we have also understood a brief about the uses of the aggregate measure. Thanks very much.